These are the fun days we like a lot. As you might have seen in yesterday's webinar, when I did the webinar yesterday, it was quite choppy, but that's the beauty of the guidance chart. The guidance chart filters out so much false signals, so much noise. That's what really gives AbleTrend such a big advantage over everything else. I mean, that's really what everybody likes so much, myself included. The guidance chart is a combination of two time frames that we combine into one chart. And the reason we do that is again, because it filters out so many false signals. We just don't take all the trades. If you just use the straight one time frame, like a 3-minute chart, because a 3-minute, 9-minute is our favorite for day trading. If you just use the 3-minute, when the choppy market comes, you're going to get a little bit chopped up at certain times. But with the guidance chart, the combination of the 3-minute, 9-minute for day trading, it's going to filter out a lot of noise in the market, and that's what gives us such a big advantage. The key to AbleTrend are the dots. The little red dots are the hidden support points in the market that are going to stop or block the price from going lower, like 5 or 6 times here, twice over here. The red dots is the hidden or invisible resistance in the market that's going to stop or block the prices from going higher. You're going to be amazed how many times the prices will hit these dots and just stop. I mean, I'm watching it every minute of the day for 12 years. And I still can't believe sometimes the prices go exactly to that point and stop, like you're just abruptly walking into a wall. It's just amazing how accurate they are. And that's really what gives us such a very big advantage, having this information that nobody else has, because the algorithm is exclusive to AbleTrend. So blue dots underneath just means we're in an uptrend and we've got plenty of protection below the price in case it goes lower. The red dots, of course, is the opposite. It means you're in a downtrend, and now you're protected in case it goes higher. However, here's a perfect example of a no-trade zone. You've got a red dot above, which means red bar, and red dot means to short it on the 3-minute chart, but when we superimpose the 9-minute on top of it, no trade. Absolutely no trade because of the blue dots below. It just tells you that there's a hidden wall of resistance, support there. We don't want anybody risking their money and potentially losing when you drive, going down the street. You don't want a wall there. I mean, you're not going to take that. You're not going to take that street. So the point is, any red or blue combination, no trade. It's as simple as that. Any red or blue combination, no trade. We never go short if there's blue dots below, because that would mean there's no clear path for the price to go lower. We'd never buy if there's red dots above. It's that simple. Here's a great trade earlier this morning. Anybody might have been up a little early, about 8 o'clock, a little before 8 o'clock Eastern. You got blue. We don't normally recommend trading pre-market, but some people do. Blue bars, blue dots, everything agreed. Triple confirmation. Blue bar, blue 3-minute dot, blue 9-minute dot, up and away it went. However, we're stopped out here. We only broke about even on that trade. Stop losses go at the second lower row of blue dots below the price. Here's the price. Here's the first row of blue dots. There's our support. There's where we put the stop loss. One extra step down, or the next lower row of dots, which would be right here. We got stopped down. Broke even on the trade, which is fine. Here's the 9:30 open, and it was perfect. This is a sweet spot. A sweet spot is a pullback back to the blue dots. The prices stop at the blue dot, and here's the key: the bar goes from green back to blue again. At the close, the finish of this bar, or the open of the next bar, that's where we're going to start the trade. So here's the 9:30 New York open. You got a perfect sweet spot. Pullback, back to support, stops at support, bounces off of it, and goes from green back to blue. Here's the first trade of the day, and boy, was it a home run. We're in at 2044. We never got out. It never broke below the blue dots. It never, nor did you have a red bar until finally over here we're stopped out. Previous lower row of blue dots would be right there. Here's the price. Here's the blue dots below. That's our defense. That's our protection. That's keeping the price up. That means stay in the trade. Don't get out. A lot of people see a pullback over here. Oh, I better get out. I'm back to even. No. You've got AbleTrend. You got a big advantage. Let's use this big advantage we have. stay in the trade. You've got double confirmation underneath the price. Blue bars, 3-minute, blue bars, 9-minute. A lot of other people who don't use able trend would have gotten out there. I would have too, because, it's a pullback, just pull back 3 or 4 points. Hey, I'm back to even. I gave back my profit. Geez, I better get out before I lose. Well, that's the emotional part. If you got able trend, stay in the trade. You're safe. You've got a double wall of protection underneath the price. Absolutely no reason to get out. Stay in the trade. And boy, did we hit a home run. Because we're in at 44. We're out over here at 57. 13 points. One contract. That's $650 in a couple of hours. Some of our clients trade, up to 100 contracts using able trend. Even just trading a couple of contracts, big time money right there.